For several months, I thought I was outsmarting the market with Starbucks options, but man, was I wrong. Hey, what's up? I'm Russ, and here on Dapper Dividends, we're all about thinking beyond the dividend. So if that sounds like you, hit that subscribe button. We won't get deep into options here, but what you do need to know is that every time you hear options contract, it means it's for 100 shares of that stock, or as we call it, the underlying. And when you hear covered call, it means you own 100 shares and you're selling a contract to somebody and promising them that you will sell them 100 shares at that price on a certain date. Or if it's a cash secured put, it means you don't own the 100 shares, but you have cash sitting in your brokerage account to cover the 100 shares, and you're promising to buy those shares from somebody at a certain price on a certain date. So this whole tale started out with me not having 100 shares of Starbucks. I had the cash in the brokerage account, and I'm going to show you exactly what happened. And then after that, we're just going to look really quickly at some of the metrics for Starbucks on Simply Safe Dividends, and then get you an intrinsic value from alphaspread.com. But before we do anything, you can go to dapperdividends.com and check out all of the options income for 2022, which there has been quite a bit of activity. As you see, tons of options, a lot of extra work I've been doing. And all in all, after all of that, we have made $2,540 in options income. So check this out. I had 12 options in total that I sold. Now, here's the very first one, April 22nd. Remember, I did not have the 100 shares of Starbucks, so I sold an $80 cash secured put, meaning I had $8,000 sitting in the account, and I promised somebody that if Starbucks was at $80 or below on April 22nd, then I would buy those shares from them, and it did close just below $80. I received $61.35 for that privilege, so right there in the cash received column, that's all the cash I've received from all the options contracts that I sold. And I did that 7 times, as you can see, from April until July 18th, when the shares were finally called away. And if you can remember, Starbucks even went down to the low $70 range here right around May to July of 2022. So when I had those shares called away in July, I received a total of $341.45. But I did try to get those shares back. As you can see, I sold a put at 82, 82, 86, that didn't hit 82, and then I finally sold the last one at $84 on November 4th, and those did not hit, so I never got the shares back. As you see on the chart right here, it started running up right as that better than expected CPI print came out, and the shares have just been going up and to the right with the market. So all in all, with those puts that I sold, meaning I've had that cash the whole time, I received $523.75. Dividends received during that time was $49. These are the dividends that were paid out since I bought that first tranche with that $80 put. So I received $49 just one time, because you remember the shares were called away July 18th, and then the X date, meaning the date you had to own the Starbucks on, they were not in the account. So I did not receive these 2 dividend payments here. So all in all, total option income plus dividends, $914.20. Man, you're like,
Russ, that sounds really good.
oh man, look at that. Not so good, because had I done nothing after that initial cash secured put hit and I received those shares, we sold it on April 20th, and I remember that because it was my birthday gift to myself. I would have had an unrealized total gain of $2,168 with the current share price at $99.56. Plus, I would have received all 3 dividend payments, giving a total gain again of $2,168. And the cash difference that is between the money that we've received and what we would have gotten, currently $1,254. We would have been ahead. Again, this is on paper. This is an unrealized gain, but still almost $1,300 more by just sitting on our hands and doing absolutely nothing. So all I'm going to do going forward is sell option contracts with a strike price that's way further away from the current share price, because we never know what's going to happen. And I do like selling these weekly, 2 weeks maximum on those. And I will just get less in option premium, but there's going to be far less risk of the shares getting called away and the market running up, because now, unfortunately, I'm sitting in cash. But as a buy and hold investor, for me, I would rather just receive less option income to maintain the shares that I have and continue collecting the dividend. So Starbucks here on Simply Safe Dividends gets a safety score of 67, current yield 2.13%. They did raise that dividend 8.2% in September of 2022, which is a very fast growing dividend. 19% 10-year compound annual growth rate, pushing 20%. That is just huge. And a 12-year dividend growth streak. And with that raise, Starbucks is paying $2.12 per share per year, which is 53 cents a quarter. So that dividend yield is about 5% above the 5-year average. The forward PE ratio is still pretty expensive, $29.30 for every $1 of Starbucks' earnings is what you're paying. And that share price, as I told you, did get as low as $69.90 in the last 52 weeks. A couple financials to look at. One thing I'm not too thrilled with is that their free cash flow payout ratio is 90%. I definitely would like to see that a little bit lower, hopefully getting closer to that 60%. Free cash flow per share currently at $2.22. Sales are at 11%, and historically they've been kind of around that 10-11%, the mid to high single digits. They do plan to keep buying back shares, although it has kind of slowed down as of late. Only 1.16 billion shares outstanding, but their sales have been going up and to the right. Return on equity is negative. Little bit of a bugaboo, but return on invested capital is still pretty healthy at 29%. Hopping on over to alphaspread.com. Check it out. They give an intrinsic value of $76.35. Now, there is no exact one number that is the intrinsic value. You get close. You put a guesstimate on it. It's like knowing somebody needs to lose weight without knowing exactly how much they weigh. It's much the same with intrinsic values. You kind of ballpark it. So $76, meaning that, hey, if it's around $80 and you're comfortable with it, there you go. The worst case scenario that they give is $64. If they were to have 5 years of negative growth, they put a valuation on it of $64. Wall Street analysts have their own spin on it too. The average is $98.48, meaning there's about 1% downside. And there's that low forecast, $64. So somebody's using an intrinsic value, right? I do like to see that insiders inside the company do own 2%. That's pretty nice. Institutions are 54%. And then everybody else, including us, is 43% of the company. But check this out. In May of 2022, Howard Schultz bought $15 million worth of Starbucks. So we love to see that. And of course, as we always say, people sell stock for millions of reasons, but they only buy for one because they think the price is going to go up. Now, I do like Starbucks. I think they've gotten a little bit more in the overvalued range. I would really like to get back in around that $80 per share, but this was in the self-directed IRA, and I think what I might be doing is looking to get into some REITs. I've had my eye on Realty Income, ticker O, and Digital Realty, ticker DLR, because when it's in a retirement account, remember that REITs are pass-through entities, so you're the one paying the taxes because they're not paying corporate taxes on that money. So it's better to hold those, in my opinion, in a tax-advantaged account. So I'd like to know if you're holding your REITs inside a tax-advantaged accounts, and what are some of your favorite REITs. But if you'd still like to keep the party going with Starbucks, ticker SBUX, well, click this little box right here next to my head where I did a handy-dandy little wrap up, maybe not so little, of Starbucks' Investor Day, where they're all about the reinvention. And if you click that, I will tell you all about it there.